Welcome back to Talk Tickers. Today we're going to dive into Magnera's first earnings call as a standalone company.
That's right, their very first one.
Since that merger, with Bari's businesses and Glatfelter back in November.
Absolutely.
Really looking to make a splash in the specialty materials world.
Definitely a company to watch.
So before we get into all the details, give us the high-level overview. How did their first quarter shake up?
Well, they posted $700 million in revenue,
Okay.
up 2% year over year.
Right.
Adjusted EBITDA came in at $84 million,
Okay.
which is an 8% jump.
Not bad.
And they're projecting adjusted free cash flow for the year between $75 and $95 million.
So a solid start. But those numbers alone don't tell the whole story. What were some of the key takeaways you got from the call?
Well, one thing that really stood out was their emphasis on global reach.
Okay.
They have 46 manufacturing facilities around the world, over 9,000 employees, and a customer base of over 1,000.
Wow.
This isn't some small operation. They're aiming for a major global presence.
That's impressive. But size isn't everything. What about their product portfolio? Are they diversified or putting all their eggs in one basket?
Oh, they are anything but a one-trick pony.
Okay.
Their product portfolio is incredibly diverse, spanning everything from healthcare to personal care to consumer solutions.
So what kind of products are we talking about here?
We're talking materials for surgical gowns and drapes components for diapers, air, and liquid filtration wipes, even stuff for laundry care. The list goes on and on.
Wow. So they really are touching a lot of different industries. That kind of diversification could be a major strength, especially in uncertain economic times.
Exactly. If one market takes a dip, they've got others to help cushion the blow.
Makes sense.
Ah.
Now, we can't talk about business these days without talking about sustainability. Where does Magnera stand on that front?
They're very vocal about their commitment to sustainability.
Okay.
They highlighted their efforts to use water responsibly, utilize renewable energy, and reduce waste. They even have 15 facilities that are already sending zero waste to landfills, with plans to expand that further.
Okay, so they're taking concrete steps. But we all know actions speak louder than words. Do you get the sense that this is a genuine commitment, or is it just marketing fluff?
I think it's more than just greenwashing. There's a growing consumer demand for eco-conscious products, and Magnera seems to be strategically positioning themselves to capitalize on that trend.
So they're performing well. They've got a diverse portfolio. They're embracing sustainability. It's all sounding pretty rosy so far. But no company is without its challenges. What are some of the headwinds Magnera is facing?
Well, they're not immune to the broader economic challenges everyone's grappling with. They specifically mentioned supply chain issues, inflation, and geopolitical uncertainty.
Yeah, those are definitely factors that could throw a wrench in the works. Anything else keeping them up at night?
They also pointed out that there's currently an oversupply in the nonwovens market, particularly in the personal care segment.
Interesting. So even though they're diversified, they're still exposed to some industry-specific challenges.
Right. It'll be interesting to see how they navigate these headwinds and what strategies they employ to mitigate the risks.
Okay, so let's dig into that a bit. What do they say about their strategic approach to tackling these challenges?
Yeah.
What are they doing to stay ahead of the curve?
They're focusing on a few key areas. Operational efficiency is a big one. They're all about streamlining their operations and driving down costs. They're also emphasizing a value over volume strategy, which means they're not just chasing market share. They're focused on profitability and maximizing the value of each product they sell.
That value over volume approach is intriguing. Can you unpack that a bit more? What does that look like in practice?
It means being very strategic about the projects they take on, focusing on areas where they have a competitive edge and can command higher margins.
So instead of trying to be everything to everyone, they're focusing on their strength and areas where they can really differentiate themselves.
Precisely. They're also making a deliberate effort to shift their product mix toward higher margin offerings.
Makes sense. Now, all of this sounds great in theory, but can they actually deliver? What are the analysts saying? Are they buying into this story?
They're definitely intrigued. Analysts were peppering them with questions about everything, from their financial projections to their debt reduction plans to their approach to working capital.
So they're on the radar, but the jury's still out on whether they can execute.
Exactly. This is a company with a lot of potential, but they've got to prove they can turn that potential into tangible results.
Okay, I'm ready to dig into some of those specific details. Let's start with the analyst questions about their projected $395 million EBITDA for the year. One analyst wanted to know if there was anything unique about this year in terms of seasonality that might affect that projection.
That's a good question, especially since their first quarter EBITDA, if you annualized it, doesn't quite line up with that full year projection.
You're like,
Magnera explained that their business, particularly in North America, tends to be a bit slower in the first quarter because of the holidays, Thanksgiving, Christmas, New Year's. They're expecting things to pick up as the year goes on.
so it's not necessarily a cause for concern that the first quarter numbers aren't perfectly aligned with the full year guidance. What about their debt reduction plan? Another analyst was trying to get a handle on how much debt they could realistically pay down by September 2025, given their cash flow projections.
Right, and remember, they're aiming to get their leverage ratio down to 3x. There's a bit of accounting noise in their first quarter numbers because of the merger, but basically they're projecting around 16 million in debt reduction from when they close the merger to the end of the first quarter, and then roughly another 70 million for the rest of the year.
So they're making progress, but they still have a lot of work to do to hit that leverage target. Now, let's talk about that nonwovens market oversupply issue. That seems like a pretty big deal, especially in the personal care segment. What specifically is Magnera doing to address that?
They're taking a multi-pronged approach. They've been proactively idling and shutting down some of their facilities to help balance supply and demand, but more importantly, they're strategically pivoting their product mix to focus on more specialized, higher value offerings where they have a competitive advantage. They mentioned having over 1,000 IP-protected technologies, so they're definitely leaning into their innovation capabilities.
So they're not just cutting back, they're also innovating and trying to create products that stand out from the crowd.
Exactly. It's about being smart and adaptable in a challenging market environment.
Now let's talk about raw materials. An analyst asked about their most significant raw material purchases and how they're managing supply chain risks. What do they have to say about that?
Their biggest raw material purchases are polyolefins, like polypropylene and polyethylene, and also synthetic fibers and fluff pulp. In terms of managing supply chain risks, they emphasize their size and strong relationships with vendors as key advantages. They also highlighted their global reach, which gives them flexibility in sourcing materials from different regions if needed.
So being a major player in the market gives them some leverage when it comes to sourcing raw materials. But another analyst pointed out that some of Magnera's big customers, especially in personal care, are already reporting volume growth. The question is, will Magnera see that growth translate into increased volume for their own business, or are they more focused on optimizing margins and mix?
That's a great question, and it gets to the heart of their value over volume strategy. Magnera pointed out that they often see their customers' volume trends about a quarter in advance because of how inventory levels and just-in-time programs work. So they're already experiencing some of that growth. But they also emphasize that they're not just chasing volume for volume's sake. They're carefully selecting projects that align with their strategy.
So they're being strategic and discerning about which opportunities they pursue. What about passing through raw material costs to their customers? With all the inflation we've seen, that has to be a major concern.
Absolutely. Magnera emphasized the importance of passing through those costs efficiently, especially for polyolefins, which make up a huge chunk of their cost of goods sold. They've been working to incorporate price adjustment mechanisms into their contracts to address this issue.
So they're learning from the past and trying to build more flexibility into their pricing models. What about those analyst questions about 2026? It seems a little early, but investors are always looking ahead.
They are, but Magnera wasn't quite ready to share specific guidance for 2026. However, they did give us some insight into their thinking on working capital for 2025.
Did they? Okay, give us the scoop. Inflow, outflow, flat.
They're projecting flat working capital for 2025. They expect some tailwinds from the Glatfelter side of the business, which should offset some headwinds from the Bari side. So overall, they're aiming for a neutral impact on working capital.
Interesting. Well, we've covered a lot of ground here, but there's still so much to unpack.
Definitely. We've got a lot more to discuss about Magnera's strategy and what it all means for investors.
Stay with us. We're back with Talk Tickers.
Still digging into Magnera's first earnings call.
Picking up right where we left off with that
Yeah,
value over volume strategy.
right.
So what does that actually look like, when they're
Yeah.
working with their customers?
Well, one analyst was curious about, how those contracts work and if there are any big renewals coming up that might give them some leverage to really put this strategy into action.
Yeah, especially with those raw material costs they're trying to pass through.
Exactly. Magnera explained that a significant portion of their contracts come up for renewal or bidding every year, so they have a chance to adjust those prices and terms on a regular basis.
So they're not locked into anything for too long.
Right. They have that flexibility to adapt to changing market conditions. And they're really looking to incorporate more of those flexible pricing mechanisms, the kind that let them adjust for things like fluctuations in those raw material costs.
Smart move, especially in this kind of volatile market. Now, earlier you mentioned Magnera's global reach as a strength, but one analyst wanted to know more about the regional differences in terms of challenges and opportunities they're seeing.
Yeah, it's a good question because the global landscape is definitely not uniform. Like they said, their Asian business, which is less than 10% of their revenue, is actually facing some pretty intense competition.
What's driving that?
They pointed to a couple of things. One is capacity additions in that region, which is increasing supply and putting pressure on prices. And then there's also that slowing growth rate in Asia, which is impacting demand.
Interesting. Asia has been such a growth engine for so long, but it sounds like things are shifting a bit. What about other regions?
Well, they also mentioned that Europe, while a strong market overall, is facing some headwinds from inflation and a dip in consumer spending.
Not exactly smooth sailing there. Where are they seeing the most positive signs?
It might surprise you, but they said the U.S. market is currently the most stable in terms of that supply-demand balance.
Okay, so a bright spot for them. What about South America? They have a manufacturing presence there, right?
Yeah, they do. They've got a strong footprint in South America, but they are facing some competitive pressure from those Asian imports.
Ah, so globalization, a double-edged sword. Opens up new markets, but also brings in new competitors.
Absolutely. Now, one thing I found really interesting was that potential they see to leverage their diverse portfolio to create those innovative hybrid products.
Hybrid products, I'm all ears.
So they've got this deep expertise in both polymer-based and fiber-based materials, and they're excited about the possibilities of combining these technologies in new ways.
So it's not just about tweaking existing products, they're looking to create entirely new categories.
Exactly. And that's where those 1,000 IP-protected technologies really come into play. They've got a huge well of intellectual property to draw from.
It all comes back to that emphasis on differentiation and adding value. They're not just trying to be the cheapest, they're trying to be the best.
Right. They're not content to be just another commodity player. They want to be known for innovation and unique solutions.
Which is a smart move in a world where consumers are increasingly demanding more sustainable, higher performing products.
Absolutely. They're tapping into those trends and positioning themselves to really meet those evolving needs.
Okay, one last thing I want to touch on before we move on is their focus on operational efficiency. They seemed pretty determined to drive those cost reductions and streamline their operations.
Definitely. They talked about things like optimizing procurement, reducing those G&A expenses, and implementing operational excellence programs. They're leaving no stone unturned.
Makes sense, especially as they integrate those two businesses they merged. It's not just about cutting costs, it's about finding ways to make the combined company more efficient than the two separate companies were before.
Exactly. And that's what they call synergies, finding those opportunities to create more value together than apart. And, the savings they get from those efficiency initiatives can then be reinvested in growth initiatives and debt reduction.
It's all connected. So we've talked a lot about the numbers, the strategies, but at the end of the day, what's the big takeaway for investors? What should they be watching for as Magnera moves forward?
Well, I think there are a few key things to keep an eye on. First, their ability to deliver on those ambitious synergy targets is going to be crucial.
Yeah, they're aiming for 55 million in synergies over the next 3 years.
It's a big number. Second, their success in shifting that product mix towards higher margin offerings, that'll be a key driver of profitability.
Which ties into their ability to effectively pass through those rising raw material costs.
Exactly. And finally, their commitment to innovation and developing those hybrid products, that'll be essential for their long-term growth. They need to prove they can translate those 1,000 IP-protected technologies into real-world products that customers will actually pay for.
So Magnera, a company with a lot of potential, but also some hurdles to overcome.
Definitely. It's still early days, and they're betting big on their ability to execute that strategy and navigate this current economic climate. It'll be interesting to see how it all plays out.
All right, well, we've covered a lot today, from their financials to their strategic priorities. But before we wrap up,
Yes.
time for everyone's favorite segment,
All right.
where we throw all caution to the wind and indulge in some purely speculative, really entertaining, and definitely not financial advice, market shenanigans.
The moment you've all been waiting for.
Okay, drum roll, please. Our "this is not financial advice" trade idea for today is
Let's hear it.
short, Procter & Gamble, long, Magnera.
Ooh, that's a spicy one.
So explain yourself. What's the
Okay.
thinking here? Shorting a consumer goods giant like P&G seems awfully risky.
It is risky, but here's the idea. If Magnera can really lock in those favorable contracts with those big CPG companies, like you were saying, and manage to pass through those inflationary
Plus,
costs,
they seem pretty intent on doing.
right, then they could actually squeeze the margins of those giants like P&G, while boosting their own profitability.
So it's a bet that this up-and-comer can outmaneuver the established players.
Exactly. A wager on Magnera, leveraging, their diverse product portfolio, their global reach that focus on efficiency to really become a dominant force in the specialty materials market.
Okay, I see the appeal, but we got to be clear here. This is purely hypothetical for entertainment purposes only.
Seriously, folks, don't make any rash investment decisions based on our crazy ideas. Talk to your financial advisor.
But it is fun to think about, right? Imagine this new company coming in and really shaking things up.
Absolutely. It just goes to show the potential we see in Magnera and how bold they're being with their strategy.
And who knows? Maybe someday we'll look back and say, hey, remember that wild trade idea? We were actually onto something.
Stranger things have happened.
Well, that about wraps up our deep dive into Magnera's first earnings call as a standalone company.
Yeah, we covered a lot of ground.
From their financial performance to their strategic priorities, and of course that wild trade idea.
Always a good time.
Remember, this is just the starting point for your own research. Don't just take our word for it. Dive into those transcripts, check out the company website, and, form your own conclusions.
Absolutely. Do your homework, folks.
And as always, if you're looking for real financial advice, talk to a qualified professional.
Please.
Thanks for joining us on Talk Tickers. We'll catch you on the next deep dive.
See ya.